Retirement Lifestyle Show is back with a new episode. I'm your co-host, Adrian Nicholson, and the topic I have for us today is the economic cycle. And there are 4 stages to the economic cycle that I'm going to outline today and give us some practical tips about. So the state of the economy can have a significant impact on people's lifestyle and financial well-being. So understanding and preparing for changes in the economy can help you build long-term financial stability and improve your decision-making skills to set yourself up for a successful future. So the 4 stages an economy can go through are trough, peak, expansion, contraction. So there are many factors that help outline and determine what state we are in as an economy. Factors can include GDP, which is gross domestic product, and this measures the market value of all final goods and services produced within a country. So I'm going to define it now because I might mention GDP later on in the podcast. Other factors include interest rates, employment, consumer spending. So there are a lot of components that really help shape and determine where we are in our economy. But again, there are 4 main stages that I'm going to outline today and define. And I'm going to give some practical tips that can help you be more successful and navigate and thrive with whatever the future throws at us as far as an economic or a market standpoint. So I'm going to move us on to the first stage, which is trough. And this is the bottom of the economic cycle. So this is typically where the economy hits its lowest point. It's often marked by high unemployment, weak consumer spending, and there's an overall low market confidence. So some other characteristics that determine whether we're in a trough in the economy, you could see maybe people starting to cut back on discretionary spending, values may be a little bit lower, long-term investors may begin to see opportunities and undervalue assets as well in this area. So some of the practical tips I have if you think that we're in a trough in the economy is when it comes to your expenses, effectively managing and staying on top of fixed and variable expenses is key. So maybe looking at your budget again, seeing what your expenses are, really analyzing that part of your financial plan and being on top of it as much as possible and seeing where some improvements can be made can be very vital if you think the economy is at a very low point right now. Another practical tip I have is also to build up that emergency fund. That is vital during this time period in the economy because that can help with any unexpected expenses come up and that you're not having to draw from other parts of your portfolio. The final tip I have for the trough stage is look again to rebalance your portfolio. I'm going to be mentioning that more often in this podcast because this is very key. You always got to be monitoring your portfolio, your investments, your assets, and see if there's any adjustments or changes that you need to be made. If you did that at the beginning of the year or another point, great. But if you haven't done it in a while, it's always good to look at that component and see if there's any updates or changes that you need to make at this point. So the next stage in the economic cycle will be expansion. This is the growth phase. This is where economic activity begins to rise. You might see an increase in employment, consumer confidence begins to grow, and you're starting to see improvements in GDP. Some other characteristics that we're in an expansion phase in the economy is you may begin to see wages improve. This gives people more room to start spending more. And you could also see investments and the markets begin to improve. So during an expansion phase in the economic cycle, it's very good to start looking at increasing your savings or your investing. Maybe see if you could set up some automatic plan as well, where it's automated for you on a weekly or monthly basis, where if things are beginning to improve, it will definitely help if you can save a little bit more or begin to invest as efficiently as possible given this state in the economy. Also, during the expansion phase, you may want to look to see if you can lock in lower rates. Expansion phases often come before rising interest rates, so considering refinancing debt or securing fixed rates on loans can be very beneficial to somebody's financial plan or lowering the monthly expenses that they have when it comes to any liabilities that they have. And my last tip when you're in the expansion growth phase is see if you could pay off any debt right now with any excess savings that you may have that you built up after what we talked about before, where you built up that emergency savings. I'm going to move us on to the third stage, which is peak. This is the top of the economic cycle. This is where the economy has reached its highest point before a slowdown. So some other characteristics that show that we're peaking as an economy is you may see growth starting to slow down. GDP growth may start to flatten, and a slowdown in the economy may start to happen. You could also see inflation begin to rise. This is also an important characteristic of the peak stage in the economy. This is where demand often outpaces supply, driving prices higher. You could also see high employment. Job markets are strong, but wage growth may begin to plateau, stay flat. So although unemployment's low, wages aren't increasing, they're remaining flat. And going back to that inflation piece I said, where if inflation begins to rise, this may cause the Federal Reserve to increase interest rates. So the central bank may raise interest rates, which would be their answer to bringing down inflation. So that's why in the previous stage I mentioned it's really good to, when rates do come down, look to see if you can lock in any lower interest rates if you think we're in the expansion phase and there's an opportunity there. The last characteristic of the peak phase is consumer spending. This is where people feel confident but may overspend or actually start beginning to take on debt. So these are all the characteristics that you can look at if you think, hey, maybe I'm seeing some of these signs right now. This could show that we're in the peak phase of the economy. The tips I have for our listeners and viewers today within the peak phase is be extra cautious and plan effectively when it comes to large purchases or lifestyle changes, because economic conditions may begin to change very soon. So this is something where you want to plan ahead and be prepared for. This will also be a great time for you to revisit your risk tolerance and risk capacity. So I'm going to separate these two where you should revisit your risk tolerance. This determines how much risk you want to take on with your overall investment, your portfolio, where an aggressive person may be looking to allocate a lot more into equities, and a conservative person would lean more to allocating more of their funds or excess savings to cash, bonds, other stable investments. Risk capacity is how much risk that you can take on when it comes to your personal finances, your financial plan. How much loss can you take on that won't alter any of your financial goals or impact your financial future? So revisit your risk tolerance, revisit your risk capacity, and plan for this. If right now the economy is peaking, the markets are doing well, it's a good time to plan for that. Another tip I have in the peak economic cycle is secure income streams and review withdrawal strategies. I think this is also a crucial thing to look at, where your income sources are. Are you being as strategic and tax efficient as you possibly can? And the same with your withdrawal strategies. And make sure you have a solid plan in place for you that will work over the long term. And the last tip I have for this economic cycle, this particular stage, which is called peak, is diversification. Diversification is as important as ever in this stage of the economy, because this helps protect and manage any risks that are out there and make sure that you're not over allocated in a certain sector and industry that could get impacted negatively if the economy turns. So focusing on diversifying and managing your risk as much as possible is vital in this stage of the economy. The last stage of this economic cycle is known as contraction. And this may be a fear of a recession or a slowdown in the economy. You can start seeing unemployment starting to rise, job losses increasing as businesses or other parts of our society begin to start cutting costs. Next, you could see decreasing consumer spending. This is where people may be reducing discretionary purchases, impacting certain sectors like retail, travel, or entertainment. And that's where, again, if you go back to the previous tip I said, this is where diversification is key. Because again, If you're over allocated to a certain sector or industry that gets impacted negatively by the economy, that could impact your financial plan or your portfolio. Also, in the contraction stage, you may start to see falling GDP. This is where economic growth turns negative, reflecting reduced productivity and demand. There's also lower corporate profits. Companies maybe not be hitting on earnings, or the revenues start to decrease. Companies may start experiencing declining revenues, leading to budget cuts or layoffs. And you could see a decline in the stock market. So my biggest tips and advice for if you think we're in a contraction phase of the economy is to stick to your plan. Make any minor adjustments that you may need to go along the way, but sometimes sticking to your plan and staying the course and doing nothing can be the best decision for you. It may not be, but that's something too you have to consider. Maybe avoiding any spontaneous changes and letting things work their course and seeing if there are any minor adjustment changes you need to make, go ahead and do that. But if not, that's something too that you need to consider as an investor or a planner or whatever else is going on in your life at that time. You may also want to focus on limiting any new debt, whether it's a large purchase or taking on a new loan. Maybe consider waiting to see if things may start to change or you can get a better rate, or just wait another annual year. Last tip would be enhance your skills. If it's job security may be uncertain, consider learning a new skill, earning a certification, learning something new just to improve your career stability, or maybe finding a new hobby. Help yourself thrive and move and navigate during a time of a slowdown in the economy. So those are the 4 stages of an economic cycle. Again, this is a retirement lifestyle show. We appreciate your support. Make sure you leave us a good review, subscribe, like, tell your friends and family. And we appreciate all your supports over the years. And we're here to help you with everything you need. Feel free to reach out to us, and we'll be back with another great episode of the Retirement Lifestyle Show.
Schedule a conversation with Roshan, Adrian, or Erik today at retirementlifestyleshow.com. Roshan and Erik are certified financial planner practitioners. They, along with Adrian, are investment advisor representatives and serve clients across the U.S. with financial planning and investment advice through Arete Wealth. If you found this show helpful, gained knowledge, or enjoyed the time you spent with us, tell your friends and leave us a 5-star review. This will help others discover the show. To access our show notes, to download any of the tools mentioned in today's podcast, to ask us a question, or to schedule a conversation, go to retirementlifestyleshow.com. All opinions expressed by podcast hosts and guests are solely their own. While based on information they believe is reliable, neither Arete Wealth nor its affiliates warrants its completeness or accuracy, nor do their opinions reflect the opinion of Arete Wealth. This podcast is for general informational purposes only and should not be regarded as specific advice or recommendations for any individual. Before making any decisions, consult a professional. The show hosts offer investment advice through Arete Wealth Advisors, LLC, an SEC-registered investment advisor, and securities through Arete Wealth Management, LLC, member FINRA, SIPC, and NFA. Finally, our music is The Chance by Jason Shaw and Audionautics. It's part of the YouTube audio library, and it's licensed under a Creative Commons license. I am Ray Voices. Thank you for listening.